Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu, 3 o'clock in New York on Friday. Happy Aloha Friday, as we say on the islands, 26th day of June 2015, and this is the daily report for gold and silver, our weekend review. We end the week on a down note. In other words, we do have gold trading lower on the week, although higher on the day, up about $2.60 on the day, 1174.40. That's with a low of 1167 and a high of 1178. So again, a very, very tight $10 range on the day. Once again, we do have a divergence between gold and silver pricing, with gold trading nominally higher, silver off about a nickel on the day, trading below $16 and trading at 1575 and a half. We have seen it have a low of 1545, and a high of 1586. So truly a much wider range in the silver market, but nonetheless closing or trading off a nickel as of this report. Now, in terms of gold in my longer term view, I do believe that we could see a little spike up, and that would be followed by a fifth wave down. But just looking at our weekly chart, the one thing that we can see without a question of a doubt is that we have been trading in a lackluster range. The volatility, I believe, is the least volatility we have seen in terms of net change in gold prices since November of last year. This market has, without a question of a doubt, been trading in a highly defined range. You can see that not only on this weekly chart here, but our weekly moving average convergence divergence, almost a straight line, negative bent, but at the same time, you've got it continually crossing back and forth with no clear direction in terms of this weekly chart. Now, traders, of course, that was our long-term chart, and I do want to take a look at our shorter-term charts, this being the shortest term that we typically look at. It is a 4-hour chart in Japanese average format. When we look at that, we can see that we are extremely, extremely oversold at this area, considering that this market has really dipped down over $25 as it hit above 1200 back here. We saw this slide. Once we saw the slide, this is that sideways action that we have. And what we're anticipating right now in terms of the market, and especially with the Greek crisis coming to some sort of a head this weekend, one way or another, we'll find out whether they succeed or leave the European Union, whether they accept the current bailout package, which Merkel has stated is quite accommodating. And we could see a real nice jump, safe haven jump, depending on how that comes out. Now, what our system is predicting right now is that we will see an upside move. However, that upside move could take us anywhere between, call it 1180 and 1190, and that would be followed by a fifth wave down. This is our third wave right here. This, of course, is a minor count because we're looking at such short-term moves in the market. But in essence, what we are looking at is that we had this wave 3, that's this wave right here. We're now in some sort of a wave 4, which could be anywhere between 50 and 75% that of the move that we saw down. So in that way, short-term, I am looking for this market to move higher, and I'm looking for it to move higher, but really to stall out before it hits $1,200 per ounce. So traders, as we take a look at our current activity in the market through the eyes of a half-a-day chart, this of course in Japanese average format, the way that we are looking at this market, of course, this is our move here at 1230. This is that lower top at about 1200. But we're looking at a basic wave count, which looks at, this is of course in a bear count, wave 3 down, wave 4 up, and this being our final fifth wave down. Typically, our fifth wave down should, in fact, take us below this of wave 4. However, in terms of our, our minor count that's within it, we could actually have completed that and be going into some sort of an A, B, C, and that would predicate this higher move on a technical basis. And of course, we could see that depending how the current crisis in Greece really resolves itself or does not resolve itself. But this weekend will be the point in which we will get some definitive news one way or the other. So traders, as we have been talking about throughout this week and last week, there's been a basic disconnect between gold and silver pricing. Whereas they tend to move really in tandem, we've had many days in which they moved in opposing directions. Now, although I am looking for that spike that we could absolutely see in gold, and that of course is based upon a safe haven play in the market, I'm not as bullish on silver. And in fact, my longer term projection in silver is really putting us down. We're trading at around 1575 in that area today, but I believe that we could see silver drift as low as about 1510, 1525. And that's based upon a fifth wave projection that we're looking at, this being a half a day a Japanese average chart, but I believe that we could absolutely see a continuation of the pressure that we have seen throughout the week, because when we've seen gold rally, traders, we've not really seen silver rally accordingly. And especially something like a safe haven play, which definitely applies more to gold than it does to silver, we could see this separation or this unlocking of this tandem moves get more pronounced within the market. So I am looking for silver to drift lower, gold to pop up higher before going back to the downside. This has been Gary Wagner wishing you as always good trading. We will talk to you on Monday for another daily update review. Bye-bye.